Hello everyone and welcome back to the channel. This is Fair Value Finder and today we're taking a look at a stock that has been on a continuous decline. And this stock is Paramount Global, ticker PARA. We see that it hit a peak back here in the 90s and it's down to 1365 currently, hitting a low of 1362. So it's right about its 52-week low. And the peak was hit in 2021, and that's really where the decline started. So we're going to take a look at the numbers and see what exactly is going on here and why the stock just continues to fall. So we'll start with the scoreboard and see where's the value actually at. So we're coming up with a low price with a 25% margin of safety right around that $27 mark, which it hasn't even been at within the last year. Fair value right around 36 and a high, let's say 34. Earnings yield 9.54, that's good. Cash flow yield negative 0.46, that is awful. Negative is definitely not what we want to see. Dividend yield of 2.84, that is pretty good. ROE of 4.79, that is very low, especially considering a debt to equity ratio of 1.51. We want that under 1. Gross margins of 34%, net margins of 3.6%. So I'm seeing some high expenses, some high debt, and awful cash flows. Has the revenue been growing? Yes, it has. It's been growing at a compound annual growth rate of 2.7%, picking up more recently, more towards the 9.2 end. Analyst projections going forward, 1% over this year and 3.4% compounding over the 2-year period. Earnings per share growth. Earnings per share have been very inconsistent and essentially on a decline if you look at everything. Cash flow growth, very inconsistent, also essentially on a decline. Share growth, we want to see them buying back shares, not issuing more shares. So that's probably a part of the reason that there's a continued decline is they're diluting the market value by issuing more of these shares. Assets are growing in the 5 to 5.5 range. Liabilities are shrinking 1 to 2.5 range, and dividend is not really growing. We'll get into that. So we can start with that dividend number. They didn't start paying a dividend until 2022. So of course, to keep things from breaking, we have to put a 1 cent over the first 3 years. And they were paying out a decent amount and cut it this year down to 5 cents. So they cut their dividend in half. And if they continue with this 5 cents a quarter going forward, next year we'd be looking at about 20 cents. So we see a decline on the dividend front, and that's definitely not something that we want to see. I think one of the biggest issues here is the margins, and that's why the stock is on a decline. We see that they had 38% margins in 2019, down to 34 in 2022, and it's looking like there's going to be a continued decline based on the EPS that we see. And that's the issue with the streaming services is it's a race to the bottom. It's whoever can produce the cheapest content that consumers are actually willing to watch, and it's not really a good business. Is there value in this stock? Clearly there is, but if they continue at these declines, that value will never be met. And we see the net margins were in the double digits, and last year 3.7%. Cash flows came in negative this last year. They've been kind of all over the place, mostly around 3%. 3% is honestly a little low. We'd want like more in the realm of 5%. And the fact that there was negative within the last 2 years would be something that if you were wanting to buy the stock, there were decent enough reasons to look into why that was. If there was some sort of financing, some sort of acquisition for what's going on with that negative cash flow. Like we said, assets are growing, liabilities are shrinking. They have gotten a whole lot better on that debt to equity ratio, but it still has a little bit of a way to go. So if we take a look at the financials, we see some decent revenue growth. Cost of goods mostly stagnant, which is something that's really good to see. Net profit, gross profit, and EBIT, we see some stagnation in that gross profit. They're bringing in more revenue, but with the declining margins, they're not seeing actual growth in money for the company. EBIT hit a peak and went back down in 2022. 2022 just seems like a very bad year for the company. And net profit's been all over the place. It's been up and down, up and down. For the balance sheet, we do have some nice asset growth. The tangible assets have moved from negative to positive, which has helped the tangible book value move from negative to positive, which is something good. And the liabilities are on a slight downtrend. So that is something very good to see. Here's the cash flows graph just to show the inconsistencies here. Up, down, down to a negative point. And we're just projecting that they can get back to the 3% yield going forward, even though we want to see something more in the realm of 5. Dividends didn't start paying until 2022 and have just been lowering it since then. So definitely not a dividend stock, and definitely not a stock that I am interested in. If anything in the streaming space, I definitely don't feel like this is the one. Very low revenue growth, margins decreasing. The bright side is this debt to equity is getting fixed. And that's really what we're looking at here. So as of the end of last year, the majority of the value was coming from the balance sheet, and that's how it has been historically. They have a lot of assets on hand. The dividend was contributing quite a bit because they hadn't paid it previously, followed by the earnings, and then the negative cash flows kind of hurt them. So the fact that the cash flows are hopefully going to be positive this year, back to that 3%, would help bring that value back up. And we do see a shrinking in the dividend and a shrinking in the earnings. They're very inconsistent in their earnings, 5.3 to 3.9 to 6.9 to 1.6 to 0.46. So I don't see quality in these numbers, and I don't see consistency in these numbers. So definitely not a value play. Honestly, I don't know what it is. Very low growth. So probably best to just avoid. But that's what we're seeing for this one. I want to thank you guys for watching. Please like if you enjoyed the video, comment if there's any other stocks that we should look at that are at their 52-week lows, and subscribe so that you can stay up to date with everything. And I'll catch you next time.